Hello everyone, welcome back to Capital and Context. Another week, episode 20, I'm told.
Very much.
So happy to be hopefully delivering useful and consistent content to clients and admirers of Sam. This week we're going to go back to AI. A theme that sort of, is on everyone's lips. People using it at very, different paces and in different ways, but, so impactful on everything we're sort of doing day to day. And I think the business world in general. So I think it's good just to go back and revisit it once every 6 weeks, really. So, what does the AI landscape sort of look like, from a stock market, from a company perspective?
So thank you, and good to see you back from your developed market research over the last week. We've been having a few calls and a few meetings lately with some very good fund managers, despite the fact that we don't actually hold any tech direct names. Which is always good because it means that we're getting a not so salesy pitch. We're getting a more raw one. The market is maturing, which is excellent, and there are names out there which are proving that the Capex that they've been spending is converting into good revenues and earnings. So it's been worthwhile. So we're out from that initial very speculative phase, which is great. I think that'll be confirmed in the upcoming earnings cycle that we're coming into literally now. We've got some very big names this month, so that'll be an interesting end of month. But this year we got around about $725 billion US of capex going on. Next year is expected to be $1 trillion. It's a huge amount. That capex is about 100% now of operating free cash flow. We've had a few companies, including Google, do a few capital raises. Actually, interesting. The big news, obviously, a couple of weeks ago was the SpaceX IPO.
Yeah.
Google actually did around that same week a slightly either the same size or slightly bigger equity raise that same week.
Okay.
It was actually in terms of what's going on.
Why are Google doing equity? I'm surprised.
Because they're trying to get that blend of debt issuance versus equity right. Okay. After all, going back to what we were saying in terms of these people are very intelligent with knowing, when the time is for them to go out to market to pool capital for certain things.
Yeah.
They've determined that was a great timing, from a risk on sentiment to go, okay, we'll have some equity capital. Yeah. Thank you very much.
And that's their balance sheet, or is just they've got specific funding uses for that? Or?
It's going to go into AI. Absolutely. Yeah. Just as I said, more than 100% now of operating free cash flow is going into, to infrastructure spending. So that's definitely where it's going to be heading.
Yeah. 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 And lots of the podcasts I listen to, they talk about sort of scarcity. So what does that mean help the viewers understand when people are sort of talking about the scarcity map?
Yeah. So when we go, the big story over the last couple of years has obviously been Nvidia. It's making the GPUs. That's not necessarily now where the scarcity and the supply side restrictions is anymore. It's not even so much TSMC who make the machines that then make the GPU chips, the CPU chips. Yeah. So the restriction isn't there really anymore. It's now a little bit more on the physical demand, physical infrastructure side. So a little bit more getting like the land uses permissions. So there's a bit more kind of going on with regards to bureaucracy and also cooling. Let's not forget, this year alone in the pipeline is 26 gigawatts of data center build going on. That's a huge amount of power that heat that needs to be dissipated. Damn right. So I think that could be an interesting part. We've had calls that have been go back a few months. I was talking about the networking kind of side of things, so like connectors and that kind of thing. So at the moment, an awful lot is still done with copper cabling, surprisingly, actually, considering, this seems quite a noughties kind of way of doing it. So people have been looking at more kind of the fiber optic networking, but within the data centers themselves. So there's those kind of areas is where I think.
And do corporates hold their own sort of centers, or is there companies that are just specific to centers that then essentially rent them to the highest bidder?
Well, that's actually quite this month topical story, because space. To be fair to Elon, he does tend to get his calls where things are heading right 70% of the time, and so SpaceX built 2 massive data centers, which the name of which escapes me. And actually, a huge amount of their earnings at the moment is actually from these 2 data centers that they're contracted out to OpenAI and to Anthropic, because they're both desperate for more data center space. So, there is almost like the contracted out data center thing going on. But I don't know for certain, but I wouldn't be surprised if big level corporates have their own dedicated. Well, it definitely happened beforehand that they had that data centers, but whether on this scale, I'm not sure what's going on yet, which was certainly worthwhile further research and investigation. Yeah.
And as ever, America and China lead the way in these spaces. So obviously, a lot of spend, but what's that doing in terms of GDP? Is any of this spend converting to, potentially, super strong GDP numbers in any particular region? Or
so there's 2 sides of it. So one part is what is the GDP growth from construction, so the actual GDP from spending the capital expenditure and making these data centers versus what's been the productivity benefit. So from right now, what going on right now with the huge capex that's going on. So US, I wish this was UK, it'd be lovely. US GDP, quarter on quarter, roughly about 2% kind of thing. 1.5% of that can be attributed to AI infrastructure capex. Huge proportion, 74% of US GDP growth is coming from this big narrative. If you look at, so you think consumer discretionary spending in the US is roughly about 2/3 of GDP. It's only just kind of keeping up. It's not really doing a huge amount. So the one thing that is a little bit worrying when it comes to the US is it's quite a narrow growth in terms of economy. As you try to destroy the studio, so that's something to be aware of. But the productivity this year, in terms of what's going on in corporates, it's going to be roughly about 0.4 of a percentage points onto corporates earnings per share. Next year, about 1.5. So it starts to come through. We're at the early part of this. So you have, with big infrastructure spends, you have what's called a J curve. So if you can imagine, you're sinking all that capital in at the beginning, so you're lowering the J, and then as it comes up, that's obviously when your payout starts to earn back. So we're probably at the bottoming out part of, if not further towards that climbing out through part. So I think we're actually in quite an exciting time, to be honest, of that spend.
And in terms of like acquisitions, is there a sort of, sorry to put you on the spot.
No, it's fine. This is why I always have my notes.
No, just in terms of, obviously we've got the big boys, Anthropic and OpenAI and stuff, but there seems to be massive budgets for them to go and acquire the next good idea and sort of like wrap that in,
try to incorporate it
in there. So is there a sort of layer beneath these sort of big now household names? Are companies managing to stay independent, or do you just see this sort of, that's a good idea, we'll buy that, continuing? Yeah,
the problem that's been going on with that kind of space has been the companies that they've been purchasing, because as you know that has been going on, is that they're privates, and so it hasn't really been a big public market story going on. The only way it comes out is if it were to be a particularly large one. Unfortunately, depends on your viewpoint. These companies are now so massive that it's hard to see any company target that they would buy that would have a huge one-day impact on the price. But of course, you need to be aware of how efficient are they being with that purchasing. Is it worthwhile? Obviously, companies that we see that are relatively similar sizes, if one goes after the other, the market has a very big view of whether or not it's worthwhile. that isn't kind of going on at the moment, just due to the fact that these companies are now so massive that the targets that they'd be buying for ideas to feed into their models and whatnot doesn't really nudge things a huge amount. And as I said, they're private, typically.
Yeah. And do you think they're buying the ideas or they're buying the people?
Good question. People is now moving kind of like the infrastructure, the investment trusts that hold some, because there are investment trusts that are privately orientated that do have a degree in these companies. You see, when there is a person moving around, it does change the investment trust's value. So it could quite likely be. People seems to be a really important factor now with where people see the development of these AI models going. So when I say people, I mean specific developers and whatnot, rather than just the populace in general. So it is certainly a noticeable thing these days, of which Anthropic has been winning for the last year, to be honest.
And I guess sort of, that's you sort of touched on it there, that they definitely have been the winner from the last year. There's talk of a new ChatGPT model from OpenAI. Do you think they are going to come back to competing with sort of
they need to
the Claude product, or do you think they're going to go a different direction and sort of be the product for the mass market but not the product for the developer market?
I think if I was them, I would target the market that doesn't necessarily need so many ethical safeguards in place, which is kind of what they've been doing lately. Anthropic have backed themselves into a bit of a corner. Don't get me wrong, I understand why they're doing it, but they're going with the mindset very much more of kind of scientists rather than business people, in a sense of, they consider this product very much a continuous research project ongoing, which has created great products, but it means that they look at things very ethically and that kind of thing, which, is good from a society standpoint, not necessarily from a business standpoint. It means that they fell out with the US government quite obviously with how Fable, Mythos, which is their two newest models, very powerful, how they got barred for non-US entities. So I think that be the way that ChatGPT goes is go that way. But I look forward to using it because I use an awful lot of Claude credits at the moment, a lot. So it'd be interesting to see if the alternatives are better value. It's interesting that now, even at our level, we're having to consider now the costs of AI models and making sure that we use them efficiently.
Yeah. Have you named your Claude yet?
Yeah, Claude.
Not Claudette?
No. It makes it harder for me to have a go at when it's producing something wrong for me. I imagine Claude with kind of like a little top hat and a monocle going on. What about you?
Depends which day, I think.
See, there you go. Depends on which way the wind blows. Do you actually tell it what you're going to call it, or is it just off the cuff? You do, don't you?
No, I probably more name it to other people than itself, just to wind other people up that I'm completely hooked. But so
I can imagine that's quite an easy thing for you to do, to be fair.
I think then sort of, you said you don't hold anything directly tech.
No. As in an OIC or an ETF. Obviously, we hold them within our passives. Is it a bit like gold? Are we getting a bit late in the cycle to do that? I saw a client holds Polar Capital and it's a great
Scottish
mortgage trust,
and they've both done really, really well.
Scottish Mortgage Trust, to be fair, goes also through very bad periods as well. It does kind of go.
So it's a bit of a contrarian buy it when when everyone thinks it's having a bad time.
So actually, this was what I was going to kind of close. What come towards the end of the podcast on this week. So I would say actually we hold more tech than a lot of our peers. An awful lot of our peers are quite a bit more equal weight S&P 500, which means that as a result they're compared to market weighting, they're quite a bit underweight those Mag 7 and so on and so forth, compared to where we are with our market cap weighting. So it's not so much a case of we've avoided it whatsoever, and we have compared to our peers, we have lent into it to a degree. The one question that I've had recently is whether to hold a tech-specific fund and go equal weight S&P 500, because I can't do market weight S&P 500 and a tech fund, because our weighting exposure to tech would just be from this is the difference. Yeah. From a professional portfolio manager perspective, would not be bordering on reckless.
Yeah.
It's one of those things that our job is, to construct good portfolios rather than just chase outright returns. It's quite easy to chase outright returns, but you leave yourself very exposed to events. So that's one way I might do it, is hold an active tech fund, of which I have a couple of mind, and go equal weight S&P 500. And not just that, also ultimately
equal weight or underweight.
No, so the equal weight S&P 500, so everything's weighted at 1/500th within that. The other thing to bear in mind as well is from our products perspective, we need to be wary of the underlying portfolio cost. And the S&P 500 is, by a large way, the single largest holding within the fund. Say in the top portfolios, around about 40%. If you change that from a passive VAT around about 0.06%, you're going to be changing the expense of the whole portfolio quite a bit. So it's one of those things that you do have to juggle quite a bit on. I think we've got it right so far. But I think the next phase I think the next period of growth in AI isn't going to be those big Mag 7 names. I think it's going to be more nuanced. I think as I said, it's going to be connectivity, it's going to be the cooling, it's going to be the power generation. That's not going to be the market cap part. That's going to be elsewhere, and you're going to need a bit more research, and that's where you need the active manager for. So I think the next phase we might be moving, changing that element of portfolio a little bit. But we've made other parts of our portfolio a bit cheaper lately, so we've got a bit of headroom. Fair
enough. Okay. Sort of moving slightly off AI, onto sort of quarter three season, with the Q2 results. Anything on your mind there? What sort of date, sort of schedule, and anything major coming up next couple of weeks?
Yeah, so the big ones is the tail end of the month. That's when you're going to get the big tech boys kind of coming in. Just looking straight in front of me here, got 22nd, you've got Alphabet, Google. You've also got a Fed meeting as well. That's going to be delightful as well, coming in tail end. The 20th, 29th. So the 29th, you're going to have
the second with the new chair, right? Is that the second?
Correct. So the 29th of July, on one day, you've got the Fed meeting results, Microsoft reporting, Meta reporting, and then the next day you've got Amazon and Apple reporting within 2 days. Then you've got to wait till next month for Nvidia. But so that 22nd through to the 30th, that's going to be really, really busy. Next week though, we got the banks coming in. That'd be interesting to see whether they've been able to maintain their margins, because obviously we've had a little bit of sell-off go on the shorter end, so like the 1 and 2 year kind of treasuries. That'd be interesting. But Samsung, they've released their preliminary quarter report. To do that's the granular level of reporting to go on there. So fair enough to them, their managers. That happened on the 7th, so you can tell what day we're recording this. I'm going to say 2 days ago. They're saying that their profits year on year are up 17 to 18 fold. Nuts, crazy nuts. So this is the thing. Yes, Hynix and Samsung, they went on an enormous rally. But they're still quite cheap on a forward earnings basis. They really are. They've gone in opposite direction to Hynix. Hynix decided they were going to back off a little bit from the high bandwidth memory kind of thing, whereas Samsung saying, no, we're going to lean into it. Let's go for it. So that'd be interesting to go on there. But the thing to look at every call at the end of the month, what's there, particularly on the Microsofts, etc. what is the capex they're putting into AI versus what's the revenue they're currently getting out of it. That's going to be hugely important. As we know, the market moves now strangely not less off of what you're earning versus literally telling us how much you're going to spend on AI.
Yeah.
And companies are moving more now from us people saying we're going to spend another 25 billion on that versus our profits are up to another 25 billion. I mean, just people are quite worried about that, and I think that's a sign of a healthy market. People saying about bubbles, that kind of thing doesn't happen in a healthy market. People are looking at risks there, but I think the thing that I'm interested in is to see what the consumer discretionary is going to be doing this quarter. I would love to see a little bit more breadth going out. We've had companies say that around about 25% of their products they've had to up their prices on over the last quarter just because those tariffs from last year are definitely now feeding through in costs. Whether or not that's affected demand of the consumer, that could be genuinely quite an interesting part to watch over the next quarter. I don't necessarily think our peers are looking at quite yet. But I'm now saying it publicly, so yeah, maybe I should keep quiet.
Well, I'm off to Berlin next Thursday.
More developed market research.
The NAN conference.
Cool.
And tech event over in Berlin.
Very much.
So, yeah, if there's anything you want me to ask or tap into there, I think it's about 3-4 hours of conferences, and then they're calling it the festival to finish. So I'll
give you a long list.
Quite looking forward to that. But yeah, won't be here next Thursday, but maybe the Thursday after that
Thanks for the briefing.
We'll just do an episode where you can ask me some
I'd love that to turn around.
What I've taken away from that conference. So quite looking forward to that, to be honest.
I do think actually
you should just go in for the day. I think I'm on the 6 o'clock flight the next morning coming back. So
delightful.
Yeah.
No, but I think actually the questions that we've been putting forward to managers, so the events that I've been going to are they're not one-on-one, they're a little bit more, groups of 20 or so. And I was actually getting quite frustrated with the other people that were there because they weren't asking questions that I thought was going to give me a new insight. And it just gave me quite a bit of comfort that actually, although the fact that this year we haven't done a huge number of trades, but we're still very, very much at the front compared to our peers of this is where our portfolio should look and the risks that are coming and also the opportunities that are there. It really gave me that kind of hope for that. And obviously it's always helpful when the people come up to you casually afterwards go, yeah, no, that was a really good question. You kind of put me on the spot there. It's like, good, I want you to earn your pay, sunshine.
Agreed.
So yeah, I'll give you a good list.
Good. All right. Well, yeah. That brings us back up to speed with everything sort of going on in the AI space. As I say, we won't do it every week, but I think it is dominating things very heavily in both the business and financial markets. So we want to make sure we're keeping everyone on top of events and names and new names coming in. NAN is sort of one of our core agent integrating tools that we use a lot in the business, very integrated with Claude. So, yeah.
Don't want to plug in for now.
Going to be a geek for the day.
You're trying to get some affiliate revenue.
No, I want to DJ at the end. But Going to take my USB. You never know.
Go for it, mate.
Great. All right, that's another episode. So we probably just be Sam next week, and then we'll do a review of that conference and festival the week after. Keep well.
Cheers. Bye bye.